What's up, traders? Welcome back to the channel. Here we're going to be going over a futures market, so the NQ or the E-mini Nasdaq futures contract here. So here we have opened the 4-hour time frame, and as you can see, we're pretty much bullish, and we have been since October of last year. We're going to be going over a higher time frame narrative, and then we're going to be breaking down the chart, specifically looking at ways that you can implement the ICT concepts to the Nasdaq in the futures market. The same can be applied to ES, the E-mini S&P 500. In the futures market, right? So here we're going to dissect a trade, right? And we're going to start off by looking at our structure, right? Just looking at our structural highs and lows. So what we see over here is that we see price giving us a high, a low, and then we saw this high over here. Now this high was created back in July of last summer. Now since then we saw a clear structural break in this region. So this was our break of structure. So if I label that correctly with an arrow, this here is going to be our breaker structure. Now, the breaker structure here is a bearish breaker structure, of course, because we made a new low. Now, from here, we saw a continuation of this structure, giving us another break of structure to the downside. So we're now in bearish territory, or we were in bearish territory at this point. So we see price giving us our sustained lows and highs and highs and lows. And then since then, we've been pretty much on a run, right? We've been on a bullish run all the way up, giving us highs and lows and lows and highs. Okay, now from here, what we see is if we look at most recent price action over here, we've seen price run away from us, giving us continued new highs and highs and highs, right? Now, if you look over here, we have our intermediate or internal structure. We had a low being produced over here, we had a high. Now we're going to go down on the 50-minute and dissect this, but what we have over here is essentially price giving us a very clear fair value gap to enter off. Now, this is our fair value gap that we see a reaction of, right? So as ICT traders, what do you want to look out for? You want to look out for two things, right? You want to look out for inefficiencies in price and liquidity. And we have that over here in the form of an inefficiency in price. So this here is our fair value gap. So what does a fair value gap represent, and why are we interested in a fair value gap? So a fair value gap represents inefficiencies in price. So here we see a bullish candle, so we see a bullish inefficiency. So this fair value gap is what price aimed to fill as we came back down, and we're gonna study this complex pullback and this price action on the 15-minute time frame. But from a 4-hour perspective, we need to understand that we're of course heavily bullish, right? We see bullish order blocks and we see bullish fair value gaps that don't even get completely filled, right? So when you see this, what it indicates to us is heavy bullish momentum, right? So therefore we should be, from a higher time frame buyer's perspective, we should be looking primarily for buy trades, and that's what we're going to dissect in more detail. Okay, so again, on the 4-hour to dissect, what we have over here is that we have price giving us a fair value gap in this region, and we see price giving us liquidity in the form of a trend line over here, a minor trend line over here. So with these two things, we have a fair value gap over here that's now been filled, or was filled last week on Friday, and today again on Monday as we record this, and we have liquidity above us to target. So with these two things, if we just go to the side, right, the very basic ICT model is essentially price expanding upwards, then coming back into an order block. Okay, an order block, an inefficiency, a fair value gap. These are things that we all need to consider, right? Essentially, if we're going to go up, right, we're going to go down to go up. That's very important to understand. We're going to go down to go up. And why are we going to go down? Price will often move in an inefficient manner, meaning it has to leave some sort of a fair value gap, and it's price's responsibility to come back down to this zone. So when we see this over here, when we see a complex pullback, essentially what we're seeing is we're seeing price go down back into the fair value gap, filling it and giving us rebalanced orders. And that's what we see over here. We see price giving us a fair value gap, then rebalancing, giving us those orders. So this is the rebalancing of price over here, in line with the schematic on the right of your screen. Now we're also going to have a buildup of liquidity. So over here, it's typically going to be a trend line. As we head down, we're going to see a trend line in price. Now this trend line, also known as a trend line phantom for ICT traders, is simply buy side liquidity, right? So this is buy side liquidity, right? Or simply BSL, buy side liquidity. Now from here, we need to understand that price is likely to go down before it goes up. And as it goes down, it taps into a fair value gap. And as it goes up, it sweeps buy side liquidity. Okay, and this is exactly what we see over here in this region. So if I go down now to the 15-minute time frame, we can begin to dissect price action in more detail. Okay, so we can see the complex pullback here on NQ. It's pretty tough to trade this when you're in a bull market, right? Pretty tough to trade this, but what we see over here, we're going to dissect things in terms of internal and external structure. So first we want to understand what our structure actually is. So if I mark out the structure for you, what we see is we see a high, an intermediate term high, we see a low, and we see a high. So we are essentially trading bullish from the swing low, which is down here, up to the swing high. So this is our area of interest, right? This is our dealing range, right? ICT Concepts, we call it the dealing range, but it's simply a structural range, right? From the high up here down to the low, okay? So from here, there's two types of liquidity that we need to assess. The first being external liquidity and the second being internal liquidity, right? So when we refer to external liquidity, it's essentially everything outside of the leg, okay? So external liquidity, we're going to refer to as outside the leg, the structural leg. Now, internal liquidity is, you can probably guess it, internal liquidity is inside the leg. Okay, and this is very important to understand. Okay, so when we talk about our external liquidity, what we're referring to is things outside of this range. So our external liquidity is going to be, in this case, we have a high and we have a second high over here. So this forms what we call a trend line phantom. This trend line phantom is essentially liquidity for the market to target at a later date, right? So when we see higher prices, we know price has an intention to go up higher, sweeping the trend line phantom over here, okay? Now, internal range liquidity. Let's dissect internal range liquidity. Now, internal range liquidity is very typically trend lines as well, equal highs and lows. And here's where we see it. First, we see equal lows in this perspective over here. So here we see equal lows. And these are very simply equal lows. If I zoom into price over here, it's actually an Asian low as well, which is an extra confluence in price. This here is an equal low, and it's hovering near or just above our H4 POI. As we discussed earlier in the video, our H4 POI was in fact over here. So if I now zoom into the M15, we can get a better look at that. Our internal range of liquidity is very simply equal highs and equal lows over here, okay? We also have trendline liquidity as such, forming the same narrative, so the same perspective, right? Just above our POI, hovering liquidity, right? So we see another trendline phantom over here, same as the external range liquidity, right? So here we see price giving us a trendline phantom, right? And now this trendline phantom serves as the same purpose as for the external liquidity, right? Price has a reason to go lower, right? We see price has a reason to go lower, right? Sweeping liquidity, tapping into the fair value gap before heading higher. So this is important to understand, right? So internal versus external liquidity, right? So now the next thing we're going to go over is how you can frame a trade on NQ. Okay, so if we go back now in price, so we had a pretty rangy week last week where we found it quite difficult to trade the complex pullback as we went down to the POI in this region. So what's happening over here is we are now going to dissect a trade that was essentially, this trade was taken on the S&P 500, but Nasdaq and the S&P move very similarly. So we're going to be dissecting where the trade could be taken from, and it was from this region over here, right? So we're just going to go over it on the M15 because we typically save the lower time frames for the members, right? But what we see over here is if I just get rid of the Asian range indicator, right? We know that we have to start with a consolidation. The IPTA, or the interbank price range delivery, starts with a consolidation. So IPTA, or the interbank price range delivery, starts with consolidation. Now, consolidation comes in the form of an accumulation, the AMD schematic, right? So we're going to be talking about the accumulation first in the market. Now, the accumulation is simply a range, a low volume time of day, and it's a range in the market that generates liquidity. Nothing else happens in that range. It's a very low volume and low activity time of day, Now, the accumulation is very typically in the US stock market, same with a lot of forex pairs, it is the accumulation or the Asian range. So if I put the Asian range back on for you, the Asian range is simply here in purple, sorry, not purple, in orange. Okay, so this is the Asian range here in orange. Now, for those who want to know the timings, the Asian range, here they're going to be written in Eastern Standard Time. So please calibrate this to wherever you are around the world. Your Asian range will be from 8 p.m. to midnight. Now, midnight being very important, right? Because it's the midnight opening price that IPTA, the interbank price delivery algorithm, resets its price every single day. So at where are we now? So 5:15 over here is going to be the IPTA reset. So this is the New York midnight opening price or the IPTA reset. Okay. Now the IPTA reset is important because this is essentially our data point in price. This is an incredibly important data point, especially if you're an ICT trader. Simply put, with the IPTA, you want to buy below the IPTA reset. So you want to buy below the New York midnight opening price and you want to sell above. Okay. So if I just put that over here, you want to buy below the midnight opening price and you want to sell above the New York midnight opening price. This is important to establish, right? So this is the bread and butter of essentially how we trade, okay? IPTA resets at New York midnight opening price, and it's your job to sell or buy below, sell above that and buy below that. So we're going to be looking at a buy trade. So we're going to be buying below the IPTA reset price, okay? So from here, after New York has opened, right, at midnight, what we see is we see London expand down, giving us a series of lower lows and lower highs and lower lows and lower highs in this region over here, right? So we see bearish intraday or we see bearish internal structure with our lows and highs. So we see a low, a high, a low, a high, and a low. Now we see a violation in price. Okay, now it's important to pair this with time because time is very important. I've spoken about time in terms of the Asian range. Now, New York, the stock market, so SPY or S&P 500 and Nasdaq open at 9:30 Eastern time. So that's when we're going to typically see a volume kick into the markets at 2:30 UK time or 9:30 a.m. Eastern Standard Time. And it's no coincidence that we see a very clear shift in market structure over here. So this is going to be our internal break of structure, or simply a BOS for short, a break of structure. Now, when we see this in price, we need to understand that we've seen a shift in volume. So the first thing to understand is our higher time frames, or our time frames in general, are extremely bullish. So we were going into this day, we were looking for longs. We were looking for buy trades if it were to set up. This is a perfect example of where it did set up. Again, this trade was taken on the S&P 500, but the Nasdaq moves are very similar to the S&P. They're like cousins, right? So what we see over here is we see an internal break of structure to the upside. We see price violate its own structure internally, right? We're still bullish overall, but we had minor bearish structure that shifts upon open of SPY and Nasdaq at 2:30 UK time or 9:30 Eastern Standard Time. Now the next thing we need to look for after our shift of structure is a fair value gap because an order block has three rules. Our order block has three rules, right? Now, those three rules, like I discussed on live streams and in many other videos, is that we have to see a clear shift in structure. So we have to see a break of structure. That's our first rule. And we see that over here as price shifts from bearish internally to bullish, right? So we see that break of structure. So that's ticked. Now, our second rule, after a break of structures, we want to see a fair value gap form. We want to see a fair value gap or an inefficiency. We want to see an inefficiency in price. And do we see that? Yes, we do, right? So if we look over here very carefully, if I zoom into price, we had an inefficient candle over here, right? Where the wick of this candle didn't touch the wick of this candle. This candle filled in the fair value gap. So it's a bit subtle to see on the 15-minute time frame. On the 5-minute time frame, you'll get a clearer picture, but we're not going to go down there in this particular video. But this is our fair value gap candle. The M15 also provides because the markets are fractal. So if we see a pattern on the M5, we can apply it to the M15, the M30, the H1, the H4, the daily. Price is fractal, so when you can understand that all the patterns will occur on different time frames, you're in a much better position to succeed and be fluent with these intraday time frames. So now that we've seen a fair value gap and a break of structure, this gives us our key for entry. Okay, this gives us our key for entry. So where do we want to enter as an ICT trader? Now we want to enter off the top of the fair value gap. So if I just zoom into price over here, what we see is we see the wicks. We see price this wick over here filled this inefficiency over here, and we see that just over here. So this is the benefits of ICT, right? ICT allows us to be very accurate with our entries. So this is an accurate entry, right? Accurate fair value. This is an accurate entry, and the fair value gap is filled. Okay. Now, where do you want to put your stop loss? A safe place to put your stop loss is below the low of the day, which is over here. And the next thing is, where do you want to target as a trader? Now, your minimum target will be the Asian range, right? So we have the Asian high liquidity that hasn't been swept, right? So we have the Asian high over here. So that's our first point of call when it comes to targets. Asian high. Now the Asian high is an open pool of liquidity that hasn't been swept yet. So IPTA, the interbank price range, has decided to give us, of course, a bullishness, give us a bullish move in line with the high time frames. But where's IPTA going to target now based on what time we are, right? We see price has left an open pool of liquidity in the form of the Asian high, but we have something else over here. If people look to the left of their screen, we have the previous day high as well. We have a PDH, or a previous day high. So when it comes to our targets, we need to be fluent and understand where is the algorithm likely to target next, where are we likely to go. Asian highs and previous day's high, because they're so close to each other, you're better off targeting the previous day high, and that gives us a 1 to 2 hour trade, which is excellent, right? Just above the PDH for a 1 to 2 hour trade, in line with the overall high time frame narrative. And this was obviously a cracking trade that continued all the way on, right? We see price just continue all the way on, giving us very large moves to the upside. Okay, so this was a quick overview on the Nasdaq and the E-mini S&P Nasdaq. So this is essentially the futures market, but ICT concepts can be applied to the futures market as well if you know what you're doing. So essentially everything comes down to the AMD cycle, right? So we see the accumulation, manipulation, and distribution, right? So we see price giving us a consolidation or an accumulation. We need to see price run lower, enticing early sellers, and then we want to see our Judas swing form, and we enter off the rebalanced zone over here. So if I just explain this to people so they can understand, what we're going to have is we're going to have an Asian range, and this Asian range is going to accumulate liquidity, right? And that's what we saw over here in the form of the Asian range in orange, right? The Asian range accumulated liquidity for us. This was the accumulation of liquidity, right? Now, the next thing after that we had to look at was what happens after that, right? IPTA. IPTA is the interbank price delivery algorithm, and IPTA is essentially a commodity, right? IPTA is like an algorithm that resets its price at midnight New York time every single day. So this is midnight New York time, right? And essentially, this is something that happens. So this is something that's non-negotiable. It happens every single day because time is time, right? It's going to be New York midnight everywhere around the world. It doesn't matter where you are. New York midnight time happens for everybody at the same time. So it's very important to calibrate your charts to wherever you are around the world. Asian range, just to repeat, is from 8 p.m. to midnight Eastern Standard Time. So this is important to calibrate to wherever you are around the world. Now from here, our job is to buy below IPTA's reset price, i.e. buy below the New York midnight opening price. And this forms our turtle soup, or our Judas swing, or our manipulation in the AMD. So I'm going to call it a manipulation, but this has many names, such as the Judas swing, or the turtle soup, right? They all refer to the same thing. They're all a sweep of liquidity, right? And the key thing to understand with this is that it is a sweep of liquidity below the New York midnight opening price if we're looking to buy, right? And the next thing that validates a Judas swing is a clear break of structure, a clear shift of structure over here. And this is what we use with the arrow. We can call it market shift of structure or break of structure. It's all the same thing. And as traders, where do we enter off? Well, we enter off the fair value gap. So we're going to have an order block, right? And our order block must leave a fair value gap for it to be an order block, right? So for us to have an order block to enter off, it must leave a fair value gap. And we simply enter off the fair value gap. We want to have our stop loss near the low of the day or near the manipulation, and we want to target the Asian range high as a minimum, or even the previous day high if it's available, like the example we looked over. So this is a quick outlook of how you can use ICT concepts in the futures market. So looking at E-mini, we looked at the E-mini S&P 500. You can also apply it to ES, so the E-mini S&P 500. So if you like this video, give it a like, give it a thumbs up. And just a quick note, so Liquid FX, we have opened now for the new year, and we're excited to bring on as many people as possible. We're the most affordable community in the trading space. They're teaching ICT concepts completely simplified down for only £25 per month. Access to live webinars, Q&A sessions with myself, free one-to-one sessions, a full PDF course, and everything else you need to make 2024 your most profitable year yet. So if you're interested in that, shoot me a DM and we look forward to getting you in there. If you like this video, give it a like, give it a thumbs up, and I look forward to seeing you in the next one.